So today I have a lender here, Jackson Hughes from Axia Home Loans, who's going to talk to us all about interest rates and put into context what we're seeing today with what we've seen over the past several years. Mm-hmm. And at the end, we're going to get to the golden question that everybody always asks me. What's in store in 2022? What's going to happen to the market, and what are the interest rates going to do? Mm-hmm. So he's going to share kind of his thoughts on that at the end. Let's talk a bit about credit score. Is there a difference in credit rating? Like, let's say from 700 to 750 or 750 and above. Like, what should people shoot for?
Yeah, your credit score definitely does have some impact on the pricing you could get on a loan. But if you're above the 750 mark, that usually means you have pretty good credit. So I'd say that's a good number to shoot for.
And let's flesh that out a little bit. What actually factors into your credit score? How do you get a credit score?
Yeah, so when you go through the pre-approval, pre-qualification process and fill out an application, we'll pull your credit, and we pull from 3 different agencies that each give 3 different numbers. And what all goes into the credit score itself, they look at all your debts, the credit accounts that you have opened, if you have a mortgage, what those mortgage payments have looked like, have you hit your mortgage payments on time, those types of things.
When somebody pulls your credit, that reduces your credit score in some way, right? So, like, when should somebody start thinking about the pre-approval process? Because let's say somebody is kind of on the border, let's say between 600 and 700. They don't want their credit score to go down.
Right.
And every time you pull the credit, it drops it some, right?
Yeah.
So when should somebody start that process, and maybe talk to us a bit about that?
Yeah. Well, I think it's good to start the process as early as possible. And the reason for that is because if you pull your credit and it's lower than you would like to see, you have time to be able to fix it in different ways. You give yourself a period of time where you can make payments on time or pay off certain debts. And oftentimes people think of pulling credit as some very derogatory thing. And to be honest, it does drop your credit, but not by more than 5 points. So if your credit's out at 850 points, even if it dropped the full 5 points, that's less than 1%. It probably isn't going to have a big impact. And the other thing is that over about a 6-month period, the 5-point loss will come back. So say you want to buy a house in 8 months and you kind of want to see where you're at from a pre-qualification standpoint. You can pull your credit, see where you're at, what you can improve on, and then 6 months from now, if you want to buy a house and pull credit again.
So that's actually really good to know. 5 points is not that much. I mean, if you're going from 750 down to 745, basically it's not affecting your credit score. If you do it like, day after day after day, then maybe it reduces it. But can you even do it day after day?
Well, another thing to talk about is when you pull your credit from a lender or have your credit pulled, you have a 45-day window where these credit agencies will look at all the credit or all the times you pull credit as one credit pull. And the reason for that is because they expect borrowers to go out and shop rate if they need to. And so they don't look at it as a derogatory thing if you have your credit pulled from 3 different places within the week.
Tell us what has been happening with the interest rates lately and where are we at today?
Yeah, so the average rate for a par conventional mortgage is sitting kind of in the mid 3% range right now. We're in the mid 3s.
So, I mean, when you say 3.5% today, that sounds really high, but I'm thinking 5-6 years ago, we're still lower than we were 5-6 years ago. So maybe walk us through some other numbers and show us how today's rate compares to, let's say, the past 5, 10, 20 years.
Let's go back even further. Let's go back to the 80s and look at what the average rate by decade would be. So in the 80s, the average rate was about 12.7%.
Yeah. So a little bit higher.
Yeah, about 4 times higher than where we're at right now. In the 90s, it was 8.1%. In the 2000s, we're at 6.3%. 2010s for the decade, the average rate was over 4%. So on a relative basis, even though rates have climbed in the last 5 months, we're still looking at really amazing rates.
Right, and I think that's helpful to understand because you look back from last year, you're like, man, I can't believe the rates are 3.5%. Like, that's gone up almost a whole percentage
Yeah.
point in some cases.
Yeah.
But last year was the historic low out of
Right.
like all time. Let's say I'm buying a house for $350,000 and I'm locked in at, let's say, 3%.
Yeah.
What would my payment be versus 3.5% when, you know, after the rates have gone up about 0.5%?
Yeah, your payment will depend on obviously the principal and interest as well as your taxes and insurance, and there's no way to predict exactly what that would look like.
Right.
But principal and interest alone, your payment's probably about $1,450-ish.
Okay.
And you said 3.5%.
Yeah, let's say.
So if your rate jumped half a point, your monthly payment would be about $100 more.
Okay, so 0.5% on a $350,000 loan, and again, you don't quote us on this, but you're saying it's about $100 difference or so, give or take, ballpark. Mm-hmm. So even that I think is good to know.
Yeah.
Because that's significant, but it's also not the end of the world.
Yeah.
And so now let's get to the golden question. This is what everybody always asks me. What is in store for 2022? And I usually pull out my little note card and I say, well, here's exactly what's going to happen, right? Because I know.
Yeah. Yeah.
So obviously nobody knows, but what do you think is going to happen over the course of this coming year in light of what we've been seeing over the past several months?
Yeah. Well, I wish I had a crystal ball and could tell you exactly where rates would be at, but I don't. If I had to make a prediction, I think rates are going to continue to rise in 2022. I don't think they're going to go higher than 4%.
Okay.
But they are going to slowly rise, and there's a few reasons for that. Back in 2020, March of 2020, when the pandemic hit, the Fed started buying these mortgage-backed securities, billions of dollars at a time. And when they buy those mortgage-backed securities, the demand for them goes up, which means the price goes up and interest rates fall.
Okay.
So the price of bonds and the interest rate have an inverse relationship.
Mm-hmm.
So as they've been buying these bonds since March of 2020, interest rates have stayed low. And you might have heard in the news the word tapering. Mm-hmm. And what they mean by that is that the Fed is going to stop buying these mortgage-backed securities, which means the supply will go up and the price of these bonds goes down, which means interest rates will rise.
Okay.
So when you hear tapering in the news, that's what it's referring to. And when we see that, that probably means that rates will rise in 2022, but hopefully not by a crazy amount.
Yes. Interesting. Well, I was just reading actually an article in NAR, National Association of Realtors, and their chief economist, Lawrence Yun, he actually gives you a specific number. He predicts 3.7% by the end of 2022. Yeah. So right around what you're saying.
Yeah.
So 0.5%. Definitely an increase, but still, I think within the context of what we've been seeing over the past 5-10 years, not out of this world and really not that bad, honestly. I mean, I locked in my house at 3.625% 5 years ago. Mm-hmm. So if you go up to 3.7 or 4%, that's not bad. Yeah,
and knowing that rates are going to rise, there is a window where it probably is a good time to buy if you can find a deal on a house and can afford that. It might be a good time to think about purchasing a house.
Hey, thanks again, Jackson. That was great information. If you are interested in seeing if you can qualify for a loan, reach out to Jackson. I'll put his info on the screen right here. Also, if you want to keep up with what's happening here in Boise, check out this playlist here or here.